Hello and welcome to episode 77 of Homescreen. Today I'm chatting to Max Ray and Bryony Jones from Nutmeg. Max is head of product there, and Bryony runs the iOS tech side of things for the company. And we're going to be talking today about their socially responsible investing product. So this is a really cool investment vehicle that they created a few years ago to kind of create a portfolio of different investment products that Nutmeg customers can choose to invest in. So there's going to be 3 videos as usual today. First one is going to take us through setting up the pot, as they call it, the SRI pot. Then we're going to see kind of what the customer sees after they've opened that pot, so kind of all the views and what all the data that they get fed looks like. And then finally, talking about their open banking integration, so how they can make payments into Nutmeg a lot easier using 𝗕𝗿𝗄𝗏. So 3 really cool journeys, and this is a great discussion around kind of how they've gone about validating the need for these sorts of products with their customers, and how customers are actually voting with their dollars, you know, in terms of investing into the pots. So look forward to chatting to them. Right. So I guess the first question will be around the specifics of what we're going to be talking about today are Nutmeg's what you're calling the SRI options. This is a really interesting topic and a really prescient topic. We've covered a few episodes on this show of companies that have really taken this sort of functionality and put it at the heart of their offerings. So I wondered if you could start off, Max, by telling us a little bit about kind of how you came to this as something you wanted to do, and what problem it was trying to solve from that perspective.
Yeah, sure thing. So we actually just approached our 2-year anniversary of launching SRI portfolios for customers. It's about a week ago. So it's pretty exciting. The kind of traction we've seen for customers. But I guess, back in 2018 and even before that, we started getting a lot of feedback from customers, from research, from everything we're doing. We're speaking to our customers on a regular basis that actually there's a bit of a gap in the market. So people could, make decisions about how they wanted to purchase certain products, whether it was, environmentally friendly, societally friendly, they could make a statement that way. But when it came to investing, it wasn't as clear. It was a little bit murkier. In terms of the transparency about like what you're investing in, especially kind of when you come to the ETF market where, it's in the amalgamation of lots of different products and investment instruments. So we knew that there was a gap in the market and it aligned really with our customer values. And so they were saying, hey, we really want something in this space. So we thought, we're in a good position. Portfolios, we think we can actually deliver a set of kind of SRI portfolios for customers. So we actually partner with MSCI, which is one of the leading data consultancies and firms that actually looks at providing ESG scoring on portfolios and investments, and really kind of work with them to build a set of portfolios and to integrate their data into our platform so that we can actually show to customers what their portfolios are doing and how much more improved they are compared to kind of a standard set of portfolios that you might get from Nutmeg when it came to ESG ratings. So really, we're just listening to our customers, and that's really what they're telling us.
Yeah. And my understanding of the area of investments is that people used to, or traditionally would have approached sort of SRI kind of investment opportunities with a sort of more of like an ethical lens in the sense of, this is something I feel like I should invest in, rather than maybe the situation now, which could be along the lines of, these are viable options for me to invest in. They yield good returns because of different initiatives. And a few years ago, your chief investment officer released a white paper on the topic as well. So for anyone, I guess, who wants to understand a little bit more about Nutmeg's approach, that's probably the place to go and think about understand the thinking behind that. Cool. Can you and then Nutmeg more generally? I feel like a lot of people who are watching this will know, the company and what they're doing, but a little bit more specifically about your 2 respective roles and kind of where you sit within the organization. How do those kind of work structurally? Can you tell us kind of how you ended up getting into those different roles and what you did before? So Brian, I'll start with you.
Yes, so I studied computer science at university and kind of went straight into a graduate role at BAE Systems, Applied Intelligence. So it was like a huge multinational company.
Yeah.
It was more of a technical consultancy role. So it was lots of like little projects, hand them over, kind of start something new. So when I moved to Nutmeg, it was more because I wanted to sort of work on a long-standing product, something that I could be a lot more involved in the customer facing side of things, the user experience side of things. So I joined actually nearly 5 years ago, so quite a long-standing member at Nutmeg. I joined originally as a Java developer, and after I'd been there for about a year, our CTO at the time said, do you want to learn how to build a mobile app? Because I think we're going to build one. So I kind of jumped on that. So it's really cool because I've actually been working on the app for 4 years now since it started. I've kind of seen the evolution of it. It's grown a lot. It's really improved from kind of the MVP that we released back then. And so now I'm kind of leading the iOS team. So we have a separate team for Android. We have 2 separate native apps.
Okay. And Max, for you, could you kind of like explain, your role into the product side of things more particularly, and how they kind of complement the way that engineering works to a certain extent? Things like that.
Yeah, sure thing. So, I mean, I'll just start kind of, I guess, background, similar path that probably Bryony had in terms of starting at a large corporation. So I started off in graduate scheme at Barclays, kind of bounced around in different product roles, and then was really attracted to Nutmeg, kind of the vision of democratizing wealth management, being able to move to a smaller organization, kind of get your hands dirty, get involved in everything and solve problems quickly. In terms of kind of product as a function within Nutmeg, so product and engineering are kind of tied at the hip, so we work very collaboratively together. It's not kind of 2 different departments doing 2 different things, right? So the way we're structured is we have a number of different domain teams with specialisms, and they look at different customer journeys, different pieces of technology, but they're combined with engineering, product, design, and it's all part of one kind of cross-functional team that works there. So in terms of kind of the product process and the methodologies and kind of the way we approach problems, it really starts with the customer, right? So whether that's through a piece of research that we've conducted, or maybe some customer pain points that's been flagged by our customer service team, or maybe polls that we run, etc. We then start to kind of unpick some of that. Okay, so what's the kind of root cause of this problem? What are some ideas that might be able to solve and help our customers' lives be a bit easier, or help them understand their investments a bit more? And then we take it through our product discovery process, which each member of the product team, design team, picks that up just like they would kind of any other ticket, and actually kind of follow that all the way through from running customer research, looking at designs, testing designs, looking kind of the business value and the commercial value that might be associated with it, and then kind of coming on to actually where does this fit into the roadmap. And that's when things get interesting in terms of how we fit that into kind of the next couple of years or next couple of months, depending on how important it is. And one of the other things we try to do as well as having kind of our formal process for discovery is we run kind of these ideation days once a quarter. So we try to get everyone across the company involved in trying to solve a customer problem, like really rapid iteration. So get into a room or virtually on a Zoom call for a day or 2, try to solve the customer problem, build some designs, and then launch a feature really quickly. So we try to do it within a sprint of the ideation day. Just to be able to demonstrate that we're constantly trying to solve problems, even if they are really small for a customer, and kind of get them out the door. And we just actually ran our first fully remote ideation day a couple of weeks ago, and a new features coming out soon. So watch this space. It's pretty exciting. How
did it go? Obviously it's a little bit of a different environment to being in a room with everyone.
Yeah, no, it's good. It's you kind of have to work a little bit harder to get people kind of engaged, but once you get them on there, and we did a lot of prep work around the activities to do, and there's lots of great tools out there. We used Miro for a lot of the kind of whiteboarding activities, and it's really powerful. I think you just have to add a bit more structure to kind of remote ideation days, where you can be a bit more fluid when you're all in a room together and have a whiteboard in front of you.
Yeah, for sure. And one of the great things from that perspective, I've always found, is that when you bring in there's people that early on in the design process, like right at the discovery side of it. Bryony, you can attest to this. There's probably been many scenarios where you've been, shouting at a designer saying, this is going to be far harder than you think it's going to be, it sort of like does your sort of like, story pointing in a way a little bit earlier than you would expect to in the process, which I think is really helpful. How do you kind of tend to get the engineering teams involved in this sort of thing as well, or is it more the customer success side or that sort of thing?
It's all over the place. So I think the makeup of the team a couple of weeks ago was people from customer service, our marketing teams, our investment team, engineering as well.
Yeah.
And we've had members of the compliance team before. Pretty much every department we try to get involved in these days. Yeah.
Very nice. And Bryony, obviously you deal more specifically with, I would imagine the iOS side of things from a technical perspective, but talking about the core tech that kind of underlies what Nutmeg is and what it does, you must have you'll obviously have some back-end experience with your Java and all that sort of thing. But how does that all fit together, and what is Nutmeg in its kind of core?
Yeah, so like I said, I've kind of seen it evolve a lot. So when I first joined, it was kind of one huge Java backend monolith and a Ruby front end that I think was originally developed by some contractors and kind of handed over, and this was how we were going to maintain it. So the Ruby front end has moved towards a React front end now. So I think all new pages are React, and a lot of the older legacy stuff has been migrated. There's kind of a few hanging around. The Java backend monolith has been broken up into microservices over the past couple of years. So we're moving towards microservices and a more event-driven architecture. So using a tool called Kafka. Yeah. And then on top of that, so we have the other two platforms, front-end platforms, the native iOS app and the native Android application. And then I think a lot of the kind of more recent technical kind of advances we're making is a lot more to do with the DevOps side of things. So moving up to Kubernetes. So in order to kind of provide us with high availability, and especially with that event-driven architecture and the kind of decentralization of the microservices, it's basically all towards how we can scale, because the original platform that was there when I first joined, it wasn't built to scale. So that's kind of what we're really looking at now, because we've been, obviously growing so much over the past few years. That's kind of our focus, I'd say.
Yeah, I don't know if you follow, there's a bank in Brazil called Nubank, which is the big retail bank in South America. And they took kind of the scaling of their 𝗕𝗿𝗶𝗺𝗶 practice very, very seriously, to the extent that they bought the world's largest 𝗕𝗿𝗄 consultancy firm and just added them to Nubank's kind of general monolith.
To do it.
Yeah, if you can, why not? Cool. So just a quick short note on kind of team structure. So obviously, Max, you're responsible for kind of the way that product operates as a whole, I would imagine, at Nutmeg, and Bryony kind of more specific to iOS. Do you kind of take like a squad approach to those things? How are the kind of teams broken up? Who's responsible for what, and in what sense? Start with you, Max.
Yeah. So I touched on this a little bit earlier, but we have a domain structure or squad, similar kind of methodology, where teams are based around different customer experiences or journeys. Yeah. And they kind of own those. But we take a very much a kind of weak code ownership. So what we don't want to do is to create loads of bottlenecks between teams. If a team's working on a particular feature, they shouldn't be stopping someone else from another team from kind of working on a piece of their code to deliver some great customer value.
Yeah, so the mobile domain is kind of the only one that sort of sits on its own. We have responsibility for, we have the two separate teams that have responsibility for kind of everything that the app has to do. So mainly consuming data from the backend services, how we display that, and the functionality that we offer. So we work as two separate teams, but with a shared product manager. So everything we kind of do, sort of feature parity, we always develop at the same times, which means we're not duplicating the work and solving the same problems. We work very closely with the product manager and design from very early stages, which I think sort of Max touched on earlier. So, and like you were saying, that gives us that kind of ability to be very early on and sort of say, I know this is a great idea, but also it's not actually possible on an iPhone. It might be on an Android device, but not on that kind of stuff. And while we try to develop feature parity, we also want to make sure we're not going too far away from native features. So that's why we have that the separation of the two. So we have product manager, design, and then we have 5 or 6 engineers per team. I think we have mainly based in London, but we do actually work with an agency over in Belarus with some of our engineers. which I think actually has given us a real head start in this kind of transition to working from home, because we were used to doing all of our meetings online anyway. Everything we did was kind of half of us in one office, half in another, but we all moved home and carried on as normal. So we kind of had a bit of a head start with that.
Makes it a bit easier, eh? This is a new question, and forgive me if it's poorly phrased, but it's about this kind of kind of product moments over, maybe 20, 30 years or so. I often think back to like, what are the really cool products that have been built over the past few years? What would it have been like to have been involved in the making of those, be in the room when they're being discovered or designed? Don't suppose you guys ever think about that? And Bryony, is there anything you think about from that perspective?
Yeah, I mean, it's probably a bit of an obvious one, being a bit of a kind of keynote when it comes to Apple products. I always think back to the first release of the iPad, because I can remember just being absolutely, I couldn't understand why anyone would need it. But then within 6 months, a year, I desperately needed it. And I think that's probably a combination of kind of the guys at Apple being able to predict what we wanted before we wanted it, or maybe more to do with the marketing making us think we need things we don't need. It's definitely a combination of the two, but I think it would have been an interesting conversation or, kind of meeting to have been in when that was first kind of pitched, because I think it would have taken some time to get the idea into people's heads.
And Max?
Yeah, so we were talking actually, some colleagues and I, about Netflix yesterday and Reed Hastings' new book. And so it kind of prompted my thinking when you kind of around this question is, when Netflix, before they launched their streaming service, they were actually looking at like a physical box that people would basically purchase, and it would sit in their home and they would download films to and things like that. They're about to launch it, and then saw the kind of emergence of YouTube, and actually customers didn't necessarily, but they wanted convenience, they wanted ease of use, they wanted it kind of at their fingertips. I mean, basically from that point forward, they completely pivoted to the streaming service and delayed the launch for a couple of years. I think for me, it's being in that room with those discussions to be able to say, no, we're going to completely pivot. We've been working on this project for a couple of years. It's not the right thing. And all that kind of, that effort that went into it to say, no, the right thing is actually change now and go the direction of where customers are going and where the market's going. I think it's just a really brave move and really fascinating.
Yeah, because I think in that perspective, you can very easily run out of steam because you've done a certain amount of work to get to this point of validating your books, but then you've just kind of like everything's telling you against your own will that this is not the right thing, and you've got to pivot. And then it must be so hard to get the kind of the vim to get back and at it. But interesting, I guess basically what I expected from you both, Bryony, you talking about the kind of the most amazing kind of hardware technology that's kind of being put out there, and then Max, you talking about the pure customer experience side of things, which is probably a very good reflection of what you both do. So cool. So we're going to start off by taking a look at the first part of this SRI product we're talking about, and then this will kind of cover the creation of one of these pots. Right. So in this video, we're going to see kind of a general investment pot being created here, and then we can set the reason for why we're going to invest. That auto-populates a pot name. I guess you've got different sort of options here, dependent on what type of purpose the saving is for, and then we've got a time frame indicator at the top there about how far along the process we are, and then contributions, so how much money we're going to put in every month. There's a starting amount here to get us going, and then a monthly contribution thereafter. A little warning message at the bottom there to talk about kind of the repayment of debt before you do any of this sort of thing, which is kind of nice and conscientious. And then the socially responsible element to SRI. It's part of a range of different pots that we've got available to us, so fixed allocation, fully managed there, but this socially responsible one gives us information about Nutmeg's fees, and then some, in the same as every other pot, we've got information about the average costs and the market spread. So nice to see there's not a great deal of difference between that and the other products in the portfolio as well. I guess that goes back to talking about, this is an investment product, so we do expect returns from it in the same way. We have a risk and a reward balance where we can sort of split those assets up into its different constituent parts, from equities, bonds, and then this other section at the bottom. Within this, what's going on here with this little green window, kind of there's a dot and then there's, the green line. Is that the kind of the optimum, what we're recommending or suggesting?
Yeah, so for every customer, when they first sign up, they fill in this risk assessment, and that is the kind of suggested risk level. So we give you a suggested risk range, and we say anything in that range we think suits you based on the answers to the questions you've given us.
Very nice. And here we have the projected performance of the pot, and then this review screen, which shows us kind of the time frame, the starting amount, contribution, and so on. And then a little bit lower down, we have the costs over time and the gain in the portfolio. The value is presented at the top there. And then if we're happy, we can click on that big green call to action, where we go through is this an affordability check, or is it just, just
a quick affordability check. Yeah. And you can also calculate your affordability. Yeah.
Cool. And then the capacity for loss over time as well. Go ahead.
It's probably worth just pointing out that this demo is recorded on a test environment, so some of the numbers may or may not be accurate.
For sure. So the costs here broken down into individual sections, and then really nicely there tells us kind of who's charging what and why, which is, I think a lot of people are interested in that, especially from an ethics or a giving perspective. There is a sense with any kind of, be it charity or any kind of any situation where you're trying to do something good way, that you want to see accountability over where the money's going or where it's going to be put. I think it's probably no different in this scenario. And then your payment options here, a review section, and we can see the option to confirm at the bottom. The loading screen. And a very nice little tick. I can't even fathom to kind of wonder how long it must have taken to build that little tick alone. You hear all these stories about like, I hear all these stories about like Stripe developers working on the landing page for Stripe for like 4 weeks just to get the gradient right. Oh dear. But they do work. They do a fantastic job of making people feel comfortable with the process they've gone through, feeling a sense of maybe success in the activity. And yeah, it's a really nice kind of really nice kind of confirmation of the task that you've just done. In this investment mix, we've got kind of, as we saw in that journey, a range of different sort of stocks and bonds. And you mentioned there, I guess at the beginning, Max, talking about MSCI data, and I imagine that will feed into this, but can you talk a little bit more about like the investment mixes, how those portfolios are put together and so on?
Yeah, sure. So as you saw kind of on that pot flow, there were the fully managed fixed allocation SRI. So SRI is basically our socially responsible version of the fully managed set of portfolios. So they're designed, our investment team basically builds them based on SRI focused ETFs and bonds in the marketplace. So they do the research across hundreds of thousands of ETFs that are out there. They select the ones based on, and I think you touched on earlier on the conversation around this balance between socially responsible, but then also good returns and performance as well, and making sure that it's doing the most with your money that we can do based on your risk level. Yeah. So all of our portfolios are scored. We'll kind of go into that, I think, in a little bit. And then that's allows us to create a benchmark between our existing portfolios, if they don't have an SRI focus, and our SRI portfolios, which then are constructed on these SRI ETFs and bonds and things like that, which then starts to give you a rating and helps you understand actually what difference you're making with this portfolio.
Yeah, sure. And how kind of how did the analysts sort of find that experience of applying the ESG framework? Was it kind of any different to a normal approach, or are they just literally going through the same processes there?
I mean, they're going through, I wouldn't say dramatically different, like our approach to research and our approach to finding the best ETFs for customers for returns. I wouldn't say dramatically changed. And actually what we've seen, if you look at kind of past performance, SRI-based ETFs and bonds have actually performed very well historically against even other non-SRI focused portfolios out there. So it doesn't really change our strategy in terms of our forward outlook and things like that. But using the MSCI data does provide a good framework for the team to work with.
Yeah, sure. And Bryony, when it comes to building these sorts of things, so the scenario is 2-3 years ago, someone comes to you and say, we're building out an SRI pot style function. Do you kind of approach that from a build perspective in any way differently to how you would approach any of the other things that have been built before? How does that work?
Yeah, so I was thinking about this, and I mean, generally it sounds quite straightforward. You know, we build the system to handle X amount of investment styles, and we added the new investment style. So really a lot of the complexity of this product release was handled by the investment team. The problem when we came to release it, not problem, but one of the kind of challenges of it was during this time that I sort of spoke about earlier, we were moving kind of to really kind of refactor a lot of our architecture. So we were moving away from the monolith and trying to break that up. And the problem with the new investment style is it really touches everything, like right from the fees to the anything to the UI, you know, it touches every single part of our code base. So the kind of challenge was to make sure that we could get the product out quick enough, you know, but whilst also not incurring too much tech debt, because we wanted it to work with a lot of the code that was legacy that we knew we were going to be refactoring at some point soon. So I think really that was the kind of the challenge of being able to kind of add it efficiently, get it to the customer, but not incur too much tech debt, basically.
Sure. That makes sense. And obviously, the big merge over from one system to another always will add complication to whatever you're doing.
Absolutely.
One of the great challenges. And kind of when it comes to kind of requiring information, Max, I'll come to you on this one. Sort of for these pots, how do you kind of know, you know, we're talking there about affordability checks and that sort of thing. What's going on there from a technical perspective to understand if this person can afford the pot, are they the right person for it, you know, that sort of thing. What's the logic there in that perspective? Yeah,
I mean, there's a few different, I guess, pieces of logic. Obviously, we collect quite a bit of information there. So we, you know, talking about time frame, contributions, initial investment. We didn't go through it in that flow, but you know, around the suitability and how we ask different questions about your appetite for risk, and you know, how would you respond if markets go down and your investment goes down, or how, you know, if they go up, how do you respond? You know, are you going to want to withdraw money straight away, or if you're comfortable with a bit of risk? And that's all really important to help kind of set that risk band, which you saw in that flow in that kind of green bar. The other piece is around affordability, which is just kind of a separate calculation, which then starts to look at, you know, income, debts, cash flow, just to make sure that if you are kind of going to invest and you're going to be putting a lump sum and monthly contributions, that you're not maybe overstretching your bounds. Because what we don't want to do is get customers investing when, you know, they're not comfortable, or it might put some strain on their finances, because, you know, we're really trying to help customers in the long term, right? Kind of meet their goals and invest wisely. It's not about trying to get as much kind of money into the platform as possible. We want to make sure that customers are in a safe band. And I think there's a few different calculations. One's around the suitability, making sure that the risk appetite is aligned with their pot. And the second piece is around the affordability, which is a separate piece of logic and calculations that get run.
Sure. Cool. We'll take a look at what happens exactly, you know, straight after this flow now. So we've signed the scenarios, we've signed up for the pot, and we're able to kind of see how that's going to look for the user in their general kind of life. So got this little sort of tick that we saw earlier, a few kind of options there saying what we've just done, and then some kind of containers for data which will populate over time. A bit of an overview there of the risk model, the projected returns, and then that real important social responsibility score. which we've touched on this before, but there is that MSCI kind of data at the bottom, kind of added in. And then there's the option to pay in as well. So this is a kind of something that can be constantly added to. The SRI pot here includes some really nice metrics here from the environmental perspective. And then these little kind of, I want to say like pills or buttons, which kind of explain kind of in what way they're better or lower priced or whatever than the equivalent kind of portfolio with that's not got the SRI screening. So
and you can toggle between environmental, social, governance as well. So
absolutely.
You can provide that breakdown across all of them.
Yeah. So from that perspective as well, like the ESG is quite good from, I would imagine, the customer's perspective, because it covers 3 really important aspects of kind of, you know, what would be kind of considered socially conscious or socially responsible investing, rather than just environmental. So, and it's a nice spread across all of those different packages, I would imagine. So they're a great example of that. Company with a 30% female board is considered amongst other, you know, as freely as it is about CO2 in the environmental section. So a really nice range of metrics there.
Exactly.
Cool.
I think,
so go ahead, Brenny.
I was just going to say, I think one of the good things with that card that we've added, we don't add it just for SRI pots. We actually have it displayed on every single pot. So the pill that you described, you know, says 28% better. Yeah. We display that on an SRI pot, but on a normal, fully managed or fixed allocation, we just display the scores. So it's quite good, because if you have multiple pots and one is an SRI and one is not, it allows you to kind of really compare those scores and work out, you know, see really the improvements you're getting in those kind of those scores and those factors.
Yeah. And so on that, how would they kind of be gathered? You know, the percentages that we've got there, what's going on in order to produce these metrics and put them onto the screen?
Yeah, so I mean, a lot of that just sits with the investment team. It's really their kind of task. Every time they make a change to a portfolio, they regenerate the scores that they have based on the MSCI data. And that kind of just generates a static set of data for every pot risk level for every investment style we have. So then as a front end client, so the iOS app can just consume that data and display the right one for the right pot that you have.
Sure. And more specifically on the MSCI data we saw there in the journey, this would you, I mean, so in that previous in the previous point you made there, Bryony, would you that presumably wouldn't be on any of the other pots then, the MSCI data, because that's very specific to this type of investment opportunity. You know, the fact that this is data that's coming from a specialist data agency that specializes in this sort of thing. Do you have different kind of ways of do you outsource different all the different kind of investment pots sort of data to other companies, or is it just specifically this one? And if so, how is that to build into the product?
With the MSCI data? Yeah, so every pot is rated against that MSCI data. And it's just that the portfolios that the investment team build for the SRI pots are kind of built with that scoring in mind. So that's what they're kind of looking at when they're building it. But then every pot is then kind of rated against that data, which allows you to make that kind of comparison between them. Okay.
And then I guess finally the big question I'd like to ask on this is about kind of problems and, you know, any of the technical difficulties. You spoke a little bit there about kind of the technical difficulties around balancing building this with an old infrastructure, but kind of when it comes to rolling out this sort of SRI product, was there anything you had to think about, any particular hurdles, maybe from a product perspective, you know, Max, that you could talk about, or anything that was complicated from a regulatory perspective or anything like that?
Coming back to, I guess, the original customer problem, which is help me understand, you know, a bit more transparency about what my investments are. Yeah. So now that we have this data, it's how do you present it to the customer and have it make sense and be as clear and simple as possible? Because, you know, we already have an app which is having lots of data, charts, graphs, returns, and then we're going to layer on some more on your portfolio. So, you know, as you can see on that card there, it's really simple. those little pills or lozenges, really kind of clear articulation of what's improved. So that was a really big part of how we kind of articulate that to the customer. And then also educate people about, what is MSCI? Why is that important? Why are we going with a third party? What can they offer us? I think that really added a lot of weight to it. We're not making this stuff up, right? We've gone to a specialist who's rating all of our ETFs and all ETFs in the market, which allows us to then kind of add some weight and more evidence behind it to be really clear and transparent for customers.
Yeah, sure. That makes a lot of sense. And the final journey that we're going to look at today includes is kind of rated around sort of payments and in particular using TrueLayer for this sort of thing. So in this instance, we can generate a new payment. We saw it at the bottom of the pot. There's the option to pay in, but also at the bottom of this navigation, we've got sort of the ability to pay in. So a one-off payment can be generated and into our SRI pot, as we mentioned before, and enter the amounts that we'd like to pay. And then we have a really nice section there talking about the immediate impact of what this payment will do for us. And then into selecting the bank. So there's a series of banks that will be able to generate kind of payments or that have generated payment APIs. And what we're going to do here is go through one of the flows that we can generate payment with. In this instance, it's with Revolut. And then in Revolut, authorizing a payment. So as you can see there, we're using TrueLayer as kind of the payments gateway, would we say? Maybe gateway. And kind of the mediator between Revolut and Nutmeg in this instance. TrueLayer is going to kind of take us through to this like little interstitial screen, open back up on Nutmeg, and we've got a transfer straight into Nutmeg from there. So I guess some would say like really harnessing the power of kind of open banking to allow you to really make the process of depositing money super easy. Again, that really lovely kind of loading screen through to completion that we've seen on the previous video. And we can see we've invested £10. So that's a really, really smooth journey there. Cool. So off the bat, my interpretation of why you would offer open banking payments, it's ease of use, speed, that kind of thing. But what was the business logic for kind of making use of open banking? Is it something that was just cool to do that was going to make it easier, or did you feel the time was right for this sort of thing, Max?
So I guess a couple of things. Yeah, it is easier, and customers definitely trying to make it as easy to make payments as possible is great. It's kind of one of the core functions of the app. But open banking payments has been around for a little while. It was a bit more mature. We're comfortable with that. We think we get a strong proposition and product through TrueLayer.
Yeah.
So it's kind of why we went forward with it. I think it as well is it's also about speed and immediacy of those funds landing in your pot. So obviously we offer debit card payments, direct debit. Yeah. But with a bank transfer, that's the quickest method to actually be able to pay into your pot and have those funds traded at one of our investment cycles. So that's a strong kind of win for customers because not that we advocate for trying to time the market. That's not really our approach and our strategy. But if customers want to be able to make a payment and get those funds traded into the market, that's the quickest and easiest way. And we thought really that the platform was much more mature and we were ready to kind of move forward with it because we offered bank transfers in the past. They were very manual and required the customer to make it manually from their app, from their banking app or online banking. Yeah, and
I guess one of the great things about this sort of functionality is it really, there's no unnecessary drop off. You can pretty much guarantee that if the payment APIs are working really nicely, then you have a really smooth journey through from requesting money right through to putting it in, and there's no lag or time for the user to kind of lose interest, which is obviously super important in this attention economy that you've got at the minute. But TrueLayer, from my understanding, is it does a lot of work, but it's also at the behest of kind of how successful the banking APIs are, and how well they do at standing up, as an example. Especially when we're talking about the CMI9, the banks that are regulated to do these kind of I've spoken to a load of people over the past few years that have said, that they've had a really tough time dealing with these APIs. I guess what TrueLayer does for you is removes that, the need to deal directly with those. But what was the experience like, Bryony, of working with TrueLayer's kind of, I guess, documentation with its API endpoints, that sort of thing? And did you experience any technical difficulty from kind of through them, working with these big banks? How does that kind of work for you?
Yeah, I think, the main benefit of working with a company like TrueLayer is they kind of shield you from any of that kind of difficulty of working with the actual bank's APIs. They've kind of done that work for you. So they just offer you a really easy way to integrate with them. It was a great experience kind of working with them to integrate as a third party. I think as a company, I think they're very similar in terms of their ways of working and everything as Nutmeg. So it was a very collaborative approach. We kind of had constant communications, we had shared Slack channel, all of that kind of stuff that when I was working on it, when we were working on it as a team, it was ongoing conversation as though we were one team. So it was a really smooth process. There was, of course, some technical difficulties, as there always is, in terms of, one example I can think of is an iOS glitch with Safari, but they were very helpful in trying to kind of work out our best way to work around that. And I think that I'd like to think that they kind of took from that as well. So it's kind of a two-way thing. They kind of learned a lot from the experience working with us, because I think we were one of the first to do the app-to-app flow with the iOS. So, hopefully that means they've then been able to learn from that and pass feedback onto their other customers and stuff. So yeah, it was good. And even now we have kind of regular check-ins with them, so we can kind of raise any issues or, discuss how it's going, how the performance of it's going. Yeah,
for sure. And just on that note, if anyone watching this is kind of interested in figuring out how you'd work with a company like TrueLayer, then we actually did an episode with TrueLayer working with another UK fintech called Plum, and they were kind of talked about the way that relationship works and so on. So check that one out. I think it's episode 51. So you can go and get a real good insight into how kind of the two work together. But on further to that, Bryony, did you kind of, how did it work from a kind of selecting exactly what products you needed to use from the TrueLayer kind of shelf? If you were, what was that process like? Were they kind of advising more, or did you kind of go in knowing exactly what you wanted?
I think, the main driving force behind the integration with TrueLayer was really the payments API that they offer, because we knew the use case that we wanted to do originally. As Max kind of explained all the reasons why we knew we wanted to offer this kind of open banking payments. So I think we assessed a couple of different open banking third-party providers and went with TrueLayer. But then, of course, they do offer further APIs like their data API. So I know that we are looking to start integrating with that early next year. There's a couple of really good use cases that are going to really help us with things like onboarding, changing personal details, that kind of stuff. So it was very much the payments API that brought us in, but now we're kind of reaping the benefits of what else they've got to offer.
Yeah, for sure. Cool. And then from the kind of I'm not sure if this is measured or anything like that, but kind of how would you think about, the way that people using sort of this open banking flow more than they would use traditional flows at the minute? Have you seen any particular trends in terms of like the SRI ports? Is there anything going on there?
Pretty big growth in terms of customers taking out those pots. So, I think pleasantly surprised in terms of the amount of customers opening SRI pods, both in mobile and on the web. And I think we've seen a strong of our existing customers moving a lot of their kind of fully managed portfolios over to the SRI portfolios. So big win in the sense of that, we obviously are meeting the need that customers raised with us. So some pretty strong indicators there. Bryony, I don't know if you want to touch on the open banking piece.
Yes, so I think with the bank transfers, it was obviously something we did offer before. You could do a bank transfer, but it was all very manual. So there was also kind of room for human error because you had to put in your own reference and stuff like that. So that was always kind of a secondary option on the app and on the web. We always kind of encourage card payments. Since we've introduced open banking, we've moved bank transfers to kind of be the default method. And I think it's gone from kind of a tiny proportion of our payments to around a quarter, I think, already. So we're really seeing like a lot of customers adapting to it really well. as Max was saying, I think we kind of have integrated with open banking at a time when it is now quite mature. It's mature enough that customers trust in it. So, you know, when an app suddenly takes you out to another banking app and opens your banking app, customers need to know what's going on before they kind of start worrying about that. So yeah, I think we've managed to time it really well so the customers trust in it, and yeah, really starting to use it.
Great. And I think one of the really lovely things about what you both just said there is that, you know, the success of these features can very clearly be defined by people voting with their money, you know, with their in the sense of putting money into an SRI pot, or in the as you mentioned there, the really simple kind of people spending more using this sort of functionality. So great kind of reinforcement for the work that you've done, and obviously really great to see those kind of metrics come in. Just before we finish, kind of a short take on the next 6 months, maybe. I guess no company likes to think longer than 3 months nowadays, I as far as I understand. But kind of where would you love to take the product in the future? What are you excited about? What gets you up in the morning? Start with you, Bryony.
Yeah, I mean, I've seen Nutmeg come a long way in 5 years. We've kind of offered consistently offering new investments and that kind of thing. I think what I see going forward is really kind of what else on top of the investment offerings can we offer. Obviously, specifically on the app, I kind of can't wait to see more kind of tools and functionality that are a bit more making the app a one-stop shop kind of thing. So a financial app that is more than just your Nutmeg balance, for example, and really being able to help the customers with more than just that.
Sure. Max?
Yeah, I mean, I guess just building on that. So Nutmeg's always been a great place, you know, to open a portfolio, invest, be able to kind of manage that, you know, make payments, view your balance, performance returns, things like that. I think for me, the next 6 months or 3 months, you know, however you want to look at it, it is all about kind of taking that next step and looking at how customers plan a bit more for their financial future. So it's not just about, okay, I have my pot, I can see the performance, it's doing well, all right, yeah, I can make payments. It's more about, you know, scenario planning, or being able to get a more complete picture of my financial wealth, creating more engaging app. I mean, we've invested really heavily over the last year in trying to make the app as engaging as possible, with personalized prompts and trading updates from our investment team, and integrating the blog, because we don't want it to just be a functional app. We want it to be something where you want to go and you're going to get some really valuable insights from the team, but then also just about your data and about your financial wealth going into the future. So that's really what I'm excited about in the next few months.
Awesome. Well, thank you both for chatting today. Really cool to see what you've been working on.
Thanks very much for having us.
Yeah, thanks for having us.